Finally, it's over to Mangalam, who's looking at all of the cues from the futures and options space. Hi, Mangalam.
Good morning. So yesterday the Nifty broke the two-day gaining streak and the SGX Nifty is indicating that we'll open lower, understandably, because of all that took place in the Fed and the outcome of the Fed meeting overnight. But the flows do indicate that, and they're congruent to that as well. Case in point, the FIs in the cash market sold about 500 odd crores after 2 days of buying. The DIIs bought all the FIs selling, but in index futures as well. The last couple of days, we were seeing the shorts cover their position, but yesterday some of those shorts perhaps came back in the system, not all of them. 1,000 crore worth selling by the FIs in index futures and 10,000 shorts being added. More unwinding was seen on the Nifty Bank, 12% open interest unwinding as against the Nifty, which saw just about 2% open interest unwinding. And at the same time, now the FII longs are around 34%. Yesterday, they were about 38 odd percent. Importantly, it is weekly options expiry today. And ahead of that, there has been a lot of call selling. 75,000 call contracts have been added on the short side, which is telling you that levels above that 17,700, 17,800 mark could face some sort of resistance, and 15,000 short puts have covered their positions as well, making the market vulnerable to lower levels. 17,800 calls saw a fair amount of action, but it is weekly options expiry. A lot of people sell both calls and puts together. So 17,700 call, you see the premium of almost 135 odd rupees, and 17,700 put has a premium of around 110 odd rupees. So together, a premium of 250 rupees indicates that the market will be in that range of 17,450, 17,500 to about 17,900 to 17,950 itself. And 17,700 is important also because it is the 20-day moving average, an important fulcrum for the market. On the last couple of occasions where the Nifty did break down, we did see, support coming in at around that 17,500 and 17,450 mark. So that is likely to play out in today's trading session as well, if we were to go that much lower. The Indian markets have been resilient. A couple of stocks that I'll be watching out for out of, the F&O ban is India Cements, and Ambuja Cements has entered F&O ban. So cement stocks have been in focus.
All right, Mangalam, Rima, as well as Vivek, thank you for joining us and taking us through a wrap of everything that we should keep on our radar as we get into a fresh new trading session. For now, it's a 140-point cut on the SGX Nifty, so we'll get a lower start, but let's see how the day progresses from there.